$167 to $160.
Okay. Perplexity, I know now Google's price. So I will give you some questions regarding Google recent performance. Meanwhile, I'm deciding to add Google position, long position next week. So we will be discussing something more further about Google. Okay, so my first question about Google is about regulatory impact on Google's AI strategy. So we know Alphabet, who is Google's mother company, right, is facing significant regulatory scrutiny, including maybe 4.1 billion European dollar Android fine, right? And also Turkish probe into its performance maxed platform. How might these regulatory challenges affect Google's ability to scale Google Gemini's adoption, particularly in enterprise market? And could they give competitors like OpenAI's ChatGPT a strategic advantage in 2025? Well, this is my question.
Regulatory challenges definitely impact Google's ability to scale its AI tools like Gemini. The EU fines and Turkish probes create legal hurdles that slow down how fast they can roll out these technologies, especially in the enterprise market where compliance is key. Competitors like OpenAI can sometimes move faster if they're not facing the same level of regulatory scrutiny. That can give them a short-term strategic advantage, particularly in regions where Google is more heavily regulated. But Google still has big strengths in its infrastructure and data capabilities, which help it stay competitive in the long run.
Oh, okay. So that is in long run, you are also optimistic about Google. Maybe I'm giving you another question. As of June 2025, Google Gemini holds a 13.5 market share with around 350 million monthly active users, while ChatGPT commands around 60% and 600 to 700 million users. Despite Gemini's growth, right, the integration into Google's billion user ecosystem, the gap isn't significantly narrowing. What specific innovations or market conditions could help Gemini close the gap with ChatGPT by end of 2025? And how does Perplexity own market position, which is 6.2% of sharing, influence this competitive landscape? This is my question.
For Google's Gemini to close the gap with ChatGPT by the end of 2025, a few key innovations could help. Google's recent advancements with the Gemini 2.5 model focus on smarter reasoning, deeper integrations with Google Cloud and Workspace, and cost-efficient models like Flashlight for enterprises. These innovations can boost adoption, especially in the business world where tight integration into existing ecosystems is valuable. As for market conditions, broader enterprise adoption of AI tools and the need for more customized, secure solutions could favor Gemini in catching up. Now, Perplexity's position with 6.2% market share also changes the landscape. As a third player, it increases competition and drives all companies to innovate faster. Companies like Google will need to differentiate more aggressively, perhaps by focusing on trust, privacy, and seamless integration, areas where enterprises place high value. So the combination of innovation from Google and the competitive pressure from players like Perplexity could help narrow that gap moving forward.
Okay, so generally speaking, you are more confident with Google as well as yourself, Perplexity, to narrow the gap with ChatGPT OpenAI. That's a good news. So then my next question. Google's alphabetic stock, right, now priced around 166, down around 3.85% on June 20, trading at PE ratio of 18.6, below the sector median value, which is 25, with maybe 21 upside to analyst targets, which are around 200. Given recent regulatory pressures and a 9% drop tied to Apple's AI search on main A, is Google undervalued? What is a catalysts. For example, Q2 earnings on July 29, Google Cloud growth, etc., could drive a rebound in the week of June, maybe next week, June 23 to 27? This is my question.
Yes, many analysts currently see Google Alphabet as undervalued. Its price to earnings ratio is below the sector average, and it's trading below many analyst targets, which are around $200. Several catalysts could drive a rebound soon. The upcoming Q2 earnings report in late July is one, especially if it shows strong growth in Google Cloud or AI-driven products. Another potential catalyst is any update on Google's AI strategy or new product announcements. The recent drop tied to Apple's move into AI search is a concern, but it's more of a long-term threat. In the short term, strong earnings or cloud growth could definitely help lift the stock. So yes, overall, it looks undervalued right now, with room for upside if the company delivers on those fronts.
Okay, so short term, you are also optimistic about Google's price, right? Maybe I give you another question. Google's close below the daily Bollinger Band, which is 165.14, signals oversold condition. But the neutral RSI, which is 46.2, and heavy put open interest, 160 strike of 24,000 contracts suggest caution. How should short-term traders interpret these mixed signals? And what price levels or indicators should they watch for potential rebound or further correction next week? This is my question.
So for short-term traders, those mixed signals mean they have to be cautious. The price dropping below the Bollinger Band suggests it's oversold, meaning it could bounce back. But the neutral RSI around 46.2 shows it's not extremely oversold yet, so momentum isn't clear. The heavy put open interest at the 160 strike means a lot of traders are hedging or expecting downward pressure, so that could keep the price from rising sharply in the immediate term. Short-term traders should watch key support and resistance levels. If the price holds above $160, that could be a solid support level. On the upside, 170 might act as a resistance level where traders could take profit. If earnings or cloud growth news comes out, that could push sentiment in either direction quickly. Overall, traders should be careful and keep an eye on volume and any news next week.
Okay, maybe I'm giving you another question about Google Cloud and AI monetization policy, right? Google Cloud's 28% revenue growth in Q1 2025 and another 62 billion Waze acquisition, which is pending approval, highlighting Google's AI infrastructure push. How does this position Google Cloud against AWS and Azure? And could Gemini integration, for example, deep search and AI model, accelerate enterprise adoption enough to offset regulatory risk in this year 2025? This is my question.
Google Cloud is positioning itself strongly against AWS and Azure, largely due to its leadership in AI and machine learning capabilities. While AWS is more mature and Azure is known for enterprise integration, Google Cloud's edge comes from its cutting-edge AI infrastructure like Gemini, TensorFlow, and its specialized chips like the TPU. The integration of Gemini's AI capabilities, like deep search and AI model optimizations, can definitely accelerate enterprise adoption. Businesses looking for strong AI tools might prefer Google Cloud over others. However, regulatory risks still pose a challenge. While strong AI adoption could offset these risks to some degree, it's not a full safeguard. Fast-growing AI and cloud adoption can attract more regulatory attention, especially in Europe and other regions. Overall, it's a balancing act. The innovation in AI infrastructure could help Google Cloud grow faster and potentially catch up to AWS and Azure. But regulatory risks still need to be managed carefully, and that's something enterprises will consider when choosing a cloud partner.
Okay, maybe I'm giving you another question about competitive threats from Apple and others, right? The Apple's AI search integration caused around 9% of Google drop on May 8, 2025, and ChatGPT 6.2 search market share challenges Google's 92% of dominance. How significant is the threat from Apple's AI initiatives, and could Perplexity's own AI-driven search capabilities further disrupt Google's core business? This is my question.
The threat from Apple's AI search initiatives is significant for Google because Apple's integration of AI search into Safari could reduce Google's search dominance on iOS devices. Since Google pays billions to be the default search engine on Apple devices, any shift from that will hurt Google's revenue. Meanwhile, Perplexity's own AI-driven search capabilities are also gaining market share, now at around 6.2%. While that's still small compared to Google's dominant share of around 87%, it shows growing competition. These combined competitive threats from Apple and Perplexity could chip away at Google's core search business over time, forcing Google to diversify more aggressively into AI-powered products and cloud services. So while Google remains dominant for now, these emerging competitors in Apple's AI strategy present real challenges that could disrupt Google's core business in the long run.
Okay, so long run, you feel some threats. I feel Google still will be able to leverage his own AI search dominant marketplace. Okay, maybe my next question. Gemini's enterprise and consumer potential. Gemini surpassed ChatGPT in US workplace usage, maybe March 2025, and offers free trial access to Gemini 2.5 Pro with Google I/O 2025 rollout of AI model and deep search. What specific use cases, for example, workplace, search, etc., could drive Gemini adoption in enterprise and consumer markets next week? And how does Perplexity compare in these areas? This is my question.
Gemini's integration into Google Workspace is a huge driver for enterprise adoption, especially for workplace search and productivity tools. Some of the top use cases include smarter email and document drafting with AI assistance and context-aware search within company data. For consumers, Gemini 2.5 Pro offers free tier access, which can drive adoption by making advanced AI more available to everyday users. Features like deep search and multimodal capabilities, understanding text, images, and even videos can make Gemini more appealing for both personal and professional use. On the other hand, Perplexity stands out for web search accuracy and real-time data retrieval, which appeals to users who need fast and reliable search results. So both Gemini and Perplexity have strong positions, but Gemini's deep integration with Google's products gives it a big edge in enterprise environments, while Perplexity's strength is its robust, real-time search capability. Both have unique advantages in their respective markets.
Okay, I understand. So my next question is about AI investment and cost efficiency. Google Alphabet's 7.75 billion AI investment in this year 2025, which is up around 42% from last year, faces challenges from cost-effective AI models like DeepSeek. How sustainable is Alphabet's high capex strategy? And could Gemini's efficiency, for example, Flash models, help it compete with emerging low-cost AI solutions in 2025?
Alphabet's $75 billion AI investment this year is definitely a big bet. While that's a heavy capital expenditure, Google's introduction of more cost-efficient models like the Gemini Flash series helps offset some of that cost pressure. The Flash models are designed to be lightweight and cost-effective, making it easier for Google to compete with lower-cost AI solutions. That said, the sustainability of this investment depends on how quickly Google can monetize its AI offerings through enterprise adoption, cloud services, and consumer applications. The efficiency gains from these models help reduce operating costs, making the high capex strategy more sustainable in the long run. In short, Google's high investment is a long-term play, but their focus on cost-efficient AI models allows them to stay competitive with emerging low-cost solutions.
So you're still, optimistic about Google, right? Okay, so maybe last another question about Perplexity's competitive edge, right? As a competitor with 6.2 market sharing, how does Perplexity differentiate itself from Gemini and ChatGPT in terms of search accuracy, user experience, or enterprise offerings? What specific advantages could Perplexity leverage to gain market share in the second half of 2025? This is my question.
Perplexity stands out by focusing on real-time, accurate search results with transparent source citations. Compared to Gemini and ChatGPT, it's particularly strong for research-oriented tasks, academic use, and fast information retrieval. Its user experience is also focused on simplicity and intuitiveness, which appeals to both regular users and professionals. On the enterprise side, Perplexity just launched new tools like Perplexity Labs, which help companies generate reports, dashboards, and even basic apps quickly. That's a big differentiator from Gemini and ChatGPT, which are more focused on general AI tasks. So Perplexity's key advantages are its real-time search accuracy, ease of use, and now its enterprise-focused productivity tools. These give it room to grow market share in the second half of 2025, especially among users who prioritize search reliability and quick, actionable insights.
Okay, so maybe this is my last question. We go back to Google again. For the next week, I'm planning to add more long position of Google. Any suggestion to this decision?
Since you're considering adding more long positions in Google next week, you might want to watch for a few key things. First, pay attention to any news about regulatory developments or AI strategy updates, because that could impact market sentiment. Also, keep an eye on the broader tech sector performance, since Google tends to move in line with that. If the stock shows stability around the $160 support level you mentioned earlier, that could be a good entry point. Overall, if you believe in Google's long-term AI and cloud strategy, adding to your position could make sense. Just stay mindful of short-term volatility and any news that might affect sentiment next week.
Okay, thank you, Perplexity. Enjoy conversation with you. Not so long. Right. Thank you. See you next time.